I'm making this video because I don't want you to obsess with rebounds. Okay, I'll say that again. I don't want you to obsess with rebounds because the market works without rebounds. You'll be able to be a successful trader uh, not using rebounds. Okay, so in this exercise, I'm going to use a technique that we all know. All that you require is discipline. Okay, a lot of traders don't succeed because they don't have discipline and they are not persistent. Okay, you have to obey your risk management strategy. You have to understand that your best loss is your first loss. So if you say my trade is I'm going to stop out at 10 pips. Don't wait for 15. Stop out at 10. But let's get into the video, right? So what I've done for this video, guys, we're going to look at the humble crossover. So here on the right, we have an EMA of 14 and an SMA of 30. I'm sure you know the difference. You can look this up yourself. SMA reacts slowly to changes. The exponential one is much faster. So the idea is quite simple, guys. You know how this works. White over gray we buy, white below gray we sell. Okay. I've already, to keep the video short, I've already done the exercise for you guys. So I'll just show you the results. This is for this past week, right? So we are looking at if this past week, the week starting on the 5th, Monday the 5th there, and using the humble EMA SMX crossover, what would you have? How much would you have lost, or how much would you have made? Okay, so I've tallied the numbers for you. You would have made 93 pips net. That's net, guys. Positive 93 pips. So just a bit of explanation here. Guys, remember, I only deal with Euro USD, right? Please keep that in mind. Okay. So here we have a white over gray. So we would buy, but that buy turned out to be a fake entry. So I've labeled that a long, which is a loss. And then at that crossover, we had a signal to sell. So now we had a winning shot. So it goes on like that. So here we have a crossover winning long. Here we have a crossover winning short. The threshold for me, whether it's a winning trade or not, was 10 pips. So whenever a trade starts and passes past 10 pips, I classify that as a winning trade. Okay. So winning long goes on like that. Here crossover winning loss because we got in it right at the bottom here. It was right at the bottom. Okay, winning short, losing long, losing short, losing long, winning long. This is where I think most people get discouraged, right? But what people sometimes fail to realize is that in a week you are going to have a winning crossover, several winning crossovers, right? So when you add all these together, guys, so your losses are negatives, your wins are positive. So you already see that on Monday here, you had a negative 14 and a positive 36. So it's approximately 22. Okay, as an example. So 22 net, and then times that by $30 a pip. Okay, you'd have made $660, guys. 660. And then that's a total of 13,000 on that day. That's a total of 13,000. I'm rounding off numbers, guys. Just bear with me. Okay, and then it goes on like that. Okay, so what is the purpose of the video? The purpose of the video is I want you to realize that you should not, please guys, you should not obsess with rebounds. Yes, it's an additional helpful tool. Okay, but you can trade fine, you can make your money fine, just using the humble crossover. And then the problem with a lot of traders, where I think as traders we fail, and where I have failed in the past as well, is I want to note this down, guys, is because what we do is somebody wants to have like $100 account, right? And then trade maximally with that, meaning use the $100, all of it as a margin for the trade. Now the problem with this approach, guys, is it will never ever work because the size of your account, the way you need to think about the size of your account, you have to imagine if I had 3 losses in a row, would I be able to still, because I'm always using $30 a pip, would I still be able to trade? So let's look at this Friday here, this Thursday and Friday, where the market was not cooperating. Okay, so you lost, let's see, here you lost, let's say 2 pips there. Then you lost 6 pips there. So it's like 8. It's like 18, let's say 19. It's 27. So for this region here, okay, you lost 27 pips. So 27 pips times 30, it's 810 pips, dollars, guys. Okay, they should already tell you guys that to have been able to have made this 93 pips, which works out to, I'll tell you now, at $30 a pip. The total for the week at the net of 93 at $30 a pip comes out to 2,790. Okay, so guys, it does that. So guys, anyway, the total is, let me write it down properly, guys. So let's do this. You'd have made 2,790, which is assuming a $20 rand to the dollar exchange rate. However, the catch is, guys, imagine if this week was reversed, right? So imagine if these losing trades were at the beginning of the week. You know, are you going to survive because the loss was 810? Are you going to survive a 24,000 rands markdown on your account? So that's what I'm saying. The problem with a lot of traders, they want to have like $200 or something in their account and be able to make good money. That's never going to work, guys. Okay, I like to keep my video short. I hope somebody finds this useful. Okay, thank you.